Back to another market review. Today was Friday. We had another kind of sell day within the market, and this whole week kind of just been bearish expansion. We've had a classic sell week. I'll have a weekly profile video on that tomorrow. But as we can see, we engineered liquidity before market open. Market opens, and we come up. We sweep these highs here. We close back within that. That shows that this is a stop hunt. We were respecting this. And notice that we leave equal highs here like we did yesterday, but we don't need to take equal highs to be able to establish a bearish narrative. This high does not need to be taken. We are above true day open. Smart money is accumulating short positions above true day open. We then are respecting this order block still. These two down close candles. We've had that change of state delivery here. Look at the bodies. Look at the bodies and then displacement. Here we have another order block, and then in line with that order flow, and then we come up, and then we have another redistribution leg lower, and then we close back within 20 to 30% of this daily range here. Well, we don't close there, but that's where we retrace to. And then, yeah, so we've taken sell side objectives. These lows were engineered right above a larger, higher time frame liquidity pool. I'm not going to show that up on this chart, but you can look at that in your own chart. We engineered these lows right above that larger pool of liquidity. We're likely going to retrace lower into that as we have these low resistance, this low resistance liquidity signature. And this is that 15-minute inversion here. Look at the bodies, and then we have another inversion right there. We only have two 15-minute fair value gaps within this leg of expansion, and they're both influential on the right side of the curve. So here is kind of the 5-minute annotations. I know they're kind of messy, but coming into market open, same thing. Where is the low resistance liquidity? Where's the low resistance liquidity? Right here, we have low resistance, low resistance, low resistance, low resistance. And then here we come and we create a high resistance signature. We have these new week opening gaps that get respected. These green boxes are new week opening gaps. And this yellow one is the current new day opening gap. So that's how I kind of have these. And then we end up having displacement, lower sell, first stage of distribution, second stage of redistribution right there. And then we have standard deviations that I mapped out. -1 right there gets respected nicely. And then this -1 right there, that fulcrum point gets respected nicely. So here we come up, previous new week opening gaps act as resistance, and then that 15-minute inversion as well. So right here, manipulation has occurred. There has been a change in state delivery. I can trust this underlying order flow that we will likely deliver to the sell side objective right here, and then this higher time sell side objective here. So if I'm just able to get a piece of this move, a fraction of this move that is likely going to occur, then I know that over time this will be profitable. And here I'm noting here this 5-minute imbalance right there gets reclaimed, and then we have 5-minute SIBI right there, and we end up selling off there. So a pretty nice sell model there. And then this is ES. We have this opening range gap. We end up displacing through this new day opening range gap, which is from Friday opening, from the previous day closing to today's opening. Kind of meander around in that, and then we displace through that. We displace through new day opening gaps after taking buy side liquidity. What's most likely? We're most likely going to displace lower. And then right here, this is the 50% mark of this new day opening gap, new week opening gap to this new week opening gap. Event horizon PD array, which I'm not going to explain too much. I'm just going to be backtesting this more because I personally use new week opening gaps in my analysis. So I'm going to be backtesting this. It's the 50% of two new week opening gaps, and pretty much if we displace through that, we're likely going to head to the next one. So Monday, my draw on liquidity is this new week opening gap here. And then here we have these new day opening gaps. We're capping the daily range on ES. We have this standard deviation that we can project from this high to low. -2.5 gets respected nicely there. Dang, I keep on exiting out. My bad. Here we have 950 macro on ES or on NQ. My bad. We've taken buy side liquidity. We then have a market structure shift here. Pull back, imbalance right there. Notice here 950 macro kind of consolidates. We go from deep premium to deep discount, back to deep premium, back to deep discount, back in equilibrium, back to. And then we finally break away from that consolidation. Notice equilibrium is getting referred to within this price leg from body low to high here. And then notice how we have this imbalance here. Once we displace through equilibrium, this fair value gap is the one that gets respected. And notice how we do displace above equilibrium here. But what's the overall narrative? We want to see lower prices. We want to see lower prices. We have that low resistance liquidity that was left within the market, so we're likely going to reprice there. So therefore, I'm going to be looking for these bearish PDRAs instead and filtering out these bullish PDRAs. And here we're consolidation. Smart money is accumulating shorts above that midnight open and above that 8:30 opening price. So this is a study 950 macro kind of consolidation. So whenever 950 macro consolidates, wow, why does it keep on doing that? Whenever the 950 macro consolidates, the 1050 macro is like going to offer a nice expansion. And here we have manipulation higher up into this 1 minute imbalance right there. Notice we have a dealing range high to low, that previous consolidation. And look at 25% acts as real resistance. And then we displace, having that first stage of redistribution within a macro. And then we have the second stage redistribution also occurring within a macro. And then here we have the PM session. And the PM session was kind of a little bit, this is just generating liquidity. And then we have a smart money. We have an SMT showing smart money accumulation of longs below midnight open, below true day. And then we have SMT, cracking correlation. And then we end up displacing higher. We have a fair value gap right here. We have a wick right there, probably constitute encroachment. You can map that out. Then boom, we end up repricing to this SIBI right here. And notice there's not really too much going on within lunch macro. Usually during 12 to 1:30, that's when we expect to see some form of attack on profitable stops. And here we kind of just have consolidation. And I'm sorry, I usually have the 1:30 opening price drawn out. So that's going to be right here. So here we manipulate below that 1:30 opening price, come up to here, and that imbalance, we take buy side liquidity here, shift to market structure, and then that breaker is the one that gets repriced to. Also noting this volume imbalance right here that we end up respecting. Then also from this low high to low, we have a -1 standard deviation that we end up closing off of in that market on closed macro. Other than that, those are kind of my salient annotations. Friday, why did TJIF not play out? I personally don't like to look at TJIF. I think it gets me caught up. And there has to be a rhyme and reason, a narrative for why it should play out. And today, we had that larger sell-side liquidity objective. And we met that around what time? I should have that time annotated here. But around 11:30, we come up, we have another stage of redistribution. Also, how do macros engage price? Every single macro was pretty influential today. DRT levels, they act as true structural resistance and support. And then the 950 macro consolidation. When does 950 macro consolidate? And what or do we expect after that 950 macro consolidation? So that's kind of my market review. Hopefully you all have a good one, and I'll see you guys in the next one. Have a good one.